This is a Stock Trading Reality Podcast, episode 121.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He believes doing deadlifts and squats builds character. Clay Trader.
All right, hopefully you noticed in the thumbnail, in the title, that this is part 2 of an interview with penny stock legend Janice Shell. So if you did not listen to episode 120, go back, listen to that, and that way this whole interview flows a lot better. So without further ado, let's get back into the interview. Now, there's one thing I want to talk about. In fact, it inspired me to make a video, which I'll put in the show notes of this, because Janice, I guess, I don't know why I never thought to approach this issue in the way that she explained it, but it literally was like, well, that's a very commonsensical way to approach that. So I've since done a video, but I want to talk about the whole thing about penny stock shorting, because as you listen to that, you kind of notice that was the underlying theme. That was the cause of a lot of these conspiracies. It all had to do with shorting, aka shorty. And quick explanation, if you're new, what does shorting mean? Shorting just means you make money from stocks going down. Yes, that is possible in the world of the stock market to make money when a price goes down. So you can make money in both directions. But I guess, Janice, let's pretend this is a court of law and you're a lawyer and your job is to say, look, shorting penny stocks just doesn't make any sense. It doesn't, it rarely happens. What would be kind of your approach? And, you talked about this rule that exists out there that pretty much is the nail in the coffin in terms of why penny stock shorting is just such a lousy excuse when you understand the actual rules that exist.
Well, it's just not a good financial proposition, because in order to short penny stocks, any stock under $5 technically, you will be required to pay margin and maintenance of $2.50 a share. So if you want to short 1 million shares of XYZ penny stock, you will have to put up $2.5 million. Now, you don't have to pay that kind of cash to your broker, but you must have securities worth that much money in your account. And they must be, obviously, while your short position is open, you will not be able to sell any of those securities. They have to be there as collateral for your short. Now, the most any short can make on a short play is 100%. It will actually be less than 100% because you will also pay commission, obviously, and you will be paying daily fees to your broker. Those fees are not refundable. And over time, if you were to hold the position for a long while, they would add up. Now, what all this means to you as a potential penny stock short is that it would cost you literally millions to make a couple $1,000 maximum. It's just not worth it. Especially if you combine that with the fact that you have infinite risk, because penny stocks, no matter how awful they are, they can run. They can run hard, and often the scammiest run the hardest. So if you're caught in that, you could be literally destroyed. Your brokerage account emptied, and you left with additional bills to your broker. So, that a critical point here is that people seem to think that this is somehow free. Well, somebody has to place those trades that you make shorting a stock. They will be placed with a market maker who will actually execute the trades. Now, neither of those people, i.e. your broker or your market maker, or C, your market maker's clearing firm, or your broker's clearing firm, none of those people want to assume your risk. So the risk is on you. You can't push that off on somebody else. Therefore, you will be paying very high fees to whoever does this for you. And that is why, I mean, sure, it's easy for all of us to look at these stocks and say, oh, 6 or 8 months from now, this stock will be at 0001. And very likely it will be. But holding a large short position for that long is not really a practical proposition, number one. Number two, you have a liquidity problem, because if you're shorting on an exchange where stocks do enormous dollar volume and it's reliable, then shorting either because you seriously believe something is badly wrong with the company, or just to short for technical reasons, makes sense. You can do that. It will not be tremendously expensive. And you know, if you've chosen correctly, you will make money. But you won't, you know, your chances of losing your shirt are much less than if you were doing it with penny stocks. And with penny stocks, if a stock is being promoted and it's going up and it's way overpriced, there's usually a lot of volume because there's usually a promotion of some kind going on. So you could be seeing even hundreds of millions of shares of volume for a time. But as soon as the party's over and the stock begins to drop, which of course is what the shorts are looking for, then volume drops off after a few days. So how do you cover if volume drops from hundreds of millions of shares to 3 or 4 million and you're short 40 million or something? How do you do that without driving the price up? And that is another problem. The one thing shorts look for every time is reliable liquidity. And penny stocks just don't have it.
That's a great point, Janice, in terms of, because, and to her point, that's what these people on message boards, social media are proclaiming. Oh, this group, this, that, or the other, they have millions upon millions of shares. So putting aside the $2.50 rule, Janice's quote unquote point one, point two is, and if you're new, in order to make money on a short trade, you have to buy shares. That's the final process, is you have to buy the shares back. That's how you exit. So yeah, when volume drops off, and if these shorts supposedly have millions upon millions of shares, then really the stock should be skyrocketing, and the shorts would then be shooting themselves in the foot, because as they're trying to realize their profit, they're causing the price to go up, which is therefore eating away at their profit. And it's just a circular logic that doesn't make any sense. And
it just doesn't happen. I mean, there are people, yes, we all know Tim Sykes and some of his students like to short stocks. But if they post their positions, and if you look at them, they are quite cautious about what they do. Their short positions are generally pretty small. They cover at the first sign of trouble. These are not huge multi-million-dollar plays, nothing like it.
And they're not short the amounts that are manipulating prices the way pumpers and people may lead you to believe. I mean, you listen to some of these people, and it's all the shorts that are manipulating the prices. And if you're going to manipulate something, you got to have, huge positions. But yeah, and for me, what drives me nuts is, sure, short a stock that's $3, $4, $5. But when people are, proclaiming that some 003, 0003 stock has all these shorts, we're not going to do the math for you, but take $1,000 and see how many shorts that could, or how many shares that could get you short of a 0005. And then whatever that number is, remember, just $1,000, not enough to manipulate anything, but whatever that amount kicks you back, how many shares, and then multiply that by $2.50. Do you think that's a wise allocation of your capital? Because as Janice said, that is tying up your capital. You need to have that amount of assets available. So is it really worth tying up all those assets for a max profit of $1,000, which you're not going to get anyways, because like Janice said, fees are going to eat away at that over time. It just simply does not make any sense.
Well, not only that, but even if they do manage to short it, then if the stock goes up, they may just be bought out. Because, you can be bought out even if you can afford to hold the position. Your clearing firm may get jittery and buy you out.
Meaning a margin call.
Yeah, and that is expensive and unpleasant. I mean, I can think of no reason. The only reason that people even consider this is that they say, oh, well, this is a junk stock. I know it'll be worthless 6 months from now. That's true. But that will do you no good.
The economics just don't make any sense of it. Now, we didn't talk about this the first time, but I want to personally ask you about this because I'll be the first to admit I still have stuff to learn about kind of the nitty gritty details of penny stocks and all this. But I showed somebody this video, which essentially encapsulates what you talk about 250, and it just doesn't make any rule. And their reply back, and this is what I want to ask you about. No, Clay, that's only for retail. Certain market makers, I think they said like ACSM, if I can't remember the exact market maker, but no, they don't have any of those requirements. They can short free will as much as they want. So sure, Clay, I'll agree with you that retail traders can't be doing all this shorts, but it's the market makers. They don't have any sort of requirements. They don't have, there is no 250 rule if you're a quote unquote market maker. So how does that actually work from the market maker's perspective?
Yeah, well, market makers do have net capital requirements that have to be met every day. If they make some kind of unfortunate move that will jeopardize their net cap requirement, they're in big trouble with FINRA, they're in big trouble with everybody. So this is something that they are very careful about. Now, if you remember when Knight melted down back in, was it 2012?
Right, yep.
And this was due to a computer glitch. It had nothing to do with shorting. They had a bunch of positions to buy for clients on the NYSE. And they were long positions. And they were going to buy them over a period of days, depending on how stock prices were going. The idea was not to drive up the prices of these stocks by buying them all at the same time. And somehow the computer went crazy and started placing these enormous orders for these stocks. And that drove up the price of those stocks very considerably, for exchange-listed issues. I think some of them went up, 10% and more that morning. And this was ruinous for Knight. They stopped it as soon as they could, but a lot of damage had already been done. And because, among all of the other effects, essentially they had margin calls. And among all of the other effects this had, they had completely blown out of their net capital requirements. And that was why they had to go to, I forget whether I think it was Morgan Stanley over that weekend and borrow $250 million or something. So that is what, and of course Morgan Stanley cleaned up on that deal. But that is what happens if a market maker does this kind of thing. And you'd better believe that his compliance office and the risk people at the firm are just not going to put up with that kind of activity.
So essentially a market maker has the same problems that a retail trader has because they have requirements. Maybe they're not the exact same as a retail trader, but the point being they have requirements that they need to keep in mind, or else they can get in big trouble with, pretty much the governmental agencies if their capital is not remaining at acceptable levels. Am I understanding that right?
Yes, and they will be financially destroyed. Knight was very, very lucky. It got backers. People lent it money until it could get over this mess and get things straightened out. But as you've seen, it took them 5 years to get back to the stock price they had before all this began.
And
Uh,
that was all due to this capital requirement, snafu that happened.
yes. So you don't want that to happen. If you're an ordinary at an ordinary house, you will get fired if you try anything like that.
So
And
this
that
whole
would,
bit about the like I said ASCM or whatever the market maker was, that's still just people talking. I mean, because in the real world, the market makers are market makers shorting, or I mean, because you always say,
yeah,
well, no,
sure.
it's not retail, they're shorting. I mean, but to what extent? I guess is what I'm asking. Are they really manipulating stocks all over the place by shorting?
No, because this would not be in their own best interest. Market makers make money on the spread. And in penny stocks, the spread is pretty big. If you're talking a 000 stock, that's a big spread between each rung of the ladder. And, if you're down at 111 by 222, that's 100% difference. So you have the MMs making 100% on the spread every time they make a trade. That's a pretty good deal. And even if they're more expensive stocks, they're still making good money on the spread. So, and this involves absolutely no risk on their part. And the other thing to remember about MMs, I mean, I think people who trade pennies have just been conditioned to believe MMs are entirely evil and are in some way personally out to get them. I mean, first of all, much of what is done by MMs nowadays is really being done by computers.
Okay, good. I was going to ask you about this because a lot of people that I get the impression, and I guess maybe if I'm being honest, maybe I still have this impression in the back of my mind, but it's like some little guy going, hey, sitting in a cubicle. But that's not how it works.
No. And also, these guys, they don't know what the ticker's about. They just see a ticker. They know how it's trading. They have more information than retail brokers or retail investors. Retail investors have their level too, and they're very proud of that. But they're still not seeing everything. And I think people tend to become way over dependent on level two. But the MM as an individual sitting there somehow or other plotting to do this or that to screw retail is just unrealistic. Much of the time, it's just computers making the trades. With the smaller houses, maybe it is still individuals. Occasionally it is. But, unless they're really crazy people and want to risk their own livelihoods, they're not going to be doing crazy stuff. Because you saw with the sink mess a few years back, some small MMs nearly were forced out of business because they had just been careless, not because they were trying to screw anybody, and found themselves holding short positions they had never intended to hold. And were getting buy-in notices from everybody and couldn't pay up and couldn't buy the stock at any price.
So it's really, it's possible, but it doesn't. The reward doesn't match up at all with the potential risk that it needs to be taken in order to do it in the magnitude that people that you may see on social media or message boards are implying. Is that kind of an accurate summary of the market makers?
Well, the thing is, they can only short as market makers to make a market. If there is demand for the stock, they can short naked to sell. If it's, and the advantage they have in that is that they have a little longer, and in some cases considerably longer, to deliver. when they make those sales. So they don't have to cover as quickly as a retail person would, but they do have to make delivery. And so they can't just keep this short open-ended for as long as they like. That doesn't happen because they can't do it. It's not allowed. And all of that. Now, before Reg Show was in place, they actually could do that and sometimes did. But those days are over. And they now have about initially 5 days to deliver. Then they have up to 13 days. After that, they kind of have to negotiate it, but it can be as much as 35 days. But the thing about MMs that you have to realize is that they always have to take the side opposite market sentiment. If retail wants to buy, they have to sell. If retail wants to sell, they have to buy. And to make up for this, what is essentially a fundamental disadvantage to them, to make up for this, they can play the spread. So if somebody wants to sell, they can give them, they can sell to them, and then they can resell that stock at the ask. And vice versa. They can sell at the ask and buy on the bid. Always.
But at the end of the day, it's, going way back to, the comment you made about, it's the MMs holding it down and, it's all because they're shorting and holding down the price. I mean, that's not what's actually going on.
No, they don't care what the price is.
I love that. They don't care what the price is. They're just trying to create a market, play the spread, and maintain capital requirements, but they don't really actually care what the price is. They just want to make sure that, they're like you said, they don't have an agenda. They're not, some guy's not sitting in a cubicle smoking a cigar saying, we're going to hold this down, deploy all resources. We are just going to short. We're not going to let this budge. That's just not what a market maker is doing.
No, doesn't make any sense.
So good. That helped me out because that's why I figured it worked, but I wasn't quite sure what all the inner workings of a market maker is. But at the end of the day, market makers are just like retail. Yes, there's some minor differences in the requirements, but there are requirements there. And perfect example with Knight, if those requirements get screwed up, that can really set them back quite a bit. So yeah, very interesting. Did you have anything else you wanted to add on the topic of shorting before I move on to this next question?
No, I don't think so.
So the next topic here I kind of want to just talk about, and we talked about this in the last time, and you just gave some good simplistic but very efficient advice, if I can word it that way. But somebody's new, they're looking at penny stocks, and they're just bound and determined, hey, I want to give this a go. What would be some advice that you would give to somebody right out of the gates that's new to the world of penny stocks, after you're literally decades of experience researching them, seeing how things unfold? What would be some bits of advice that you'd give to that newer person?
Well, to connect this to the last segment, I think the first bit of advice would be do not listen to the nonsense about shorting. Pretend the whole shorty issue just doesn't exist. Because you see people who get into the habit of blaming every time an investment doesn't go their way, it's shorty's fault. And if you do that, you will never do well in this game. If something goes wrong with a play you make, it's your fault. I mean, it may not specifically be your fault, but it's your responsibility. And if you lose money, it's because you didn't sell soon enough, or because you shouldn't have bought at all. But it is not somebody else's fault. So don't look for scapegoats. That's one thing. Another thing would be resist the urge, and we all know, we've all done it. No matter what kind of investing we do, we've all felt the temptation to hang on for just another couple of days, just watch it go up a little bit more. And how many times have you done that? And while you're sitting there, glassy-eyed, staring at your screen, it crashes and burns. Take profits regularly, be very disciplined, cut losses, do not average down, never with penny stocks. Averaging down is a terrible, terrible idea.
But what about, you see it, but long and strong, strong hands. It's, what do you say to the people that are reading the mentality by some of these other people are saying, if you sell, you're being disloyal. If you sell, you're not a true long. I mean,
Oh, yeah. Well, what I say is investing is not a team sport.
go into that more, because I remember that from the last interview. Investing is not a team sport, and especially because of liquidity issues, penny stocks are not team sports. So I mean, go into that a little bit more.
Well, you see a great deal nowadays, especially now. In the past, of course, there have always been true longs. There were the CMKX true longs, the CMKX team. Do not get involved with teams. Do not get involved. Don't think of yourself as a true long. First of all, penny stocks are not investment quality. They are trading vehicles. And you see people claiming they have enormous, this is usually after the stock has crashed and burned, and someone will say, I lost $400,000. And I always wonder, now I know that there have been cases in which people really have lost that much because they invested that much. But in most of these cases, people didn't lose as much as they claimed. They just failed to take profits. So always think of your investment as the amount of money you put into it. Until you sell it, whatever's on paper is not your money. It is a paper profit. If you want to realize your profit, sell the stock. And this is what people ought to do. Now, there are a lot of penny players these days who, because once upon a time, back in the late 90s, early 2000s, a lot of people were extremely naive. People have wised up, partly because they have better technology, partly because there's been a lot of publicity about toxic funding and things like that. People have a better understanding of what dilution is now, I think, than they did 10 years ago. But the most successful players set a target. They buy the stock at X. They say, if it gets to Y, I am going to sell. And if that happens, they do sell. They don't usually buy back. Usually they move on to another stock. Sometimes they will revisit the stock that they had profited on and sold. But do take profits. Take profits at every opportunity. There are people, and probably they're the most successful penny players. They will take profits of 30 to 50%. And they make very sure to take all of their original investment off the table. Then they have what they call free money to play with. It isn't really free money because it is their money. They could sell and make additional profit at that point, but choose not to do so. However, they are not, this is called preservation of capital. And investors, no matter what they invest in, should consider that an important thing to do. Preserve your initial stake. Above that, you have the freedom to mess around a little bit. But, do not sit there waiting for the elusive 10-bagger because the chances are you will never see it. And then the stock will, you will be, I saw with Qubit, Qubit was a scam with a product, and it had an incredible and kind of surprising run back around 2004 or 2005. I'm not sure when. And they had a lot of true longs. And these people had been in the stock for a long time. They had really a lot of stock. The thing ran like crazy. And these people really did become millionaires. But not very many of them had the sense to sell. And some of them just sat there and watched their millions dwindle away until the stock was back at 0001. Don't be that guy.
And there's nothing wrong with taking profits despite what you may be reading, right?
Yeah. Taking profits is the whole point. I mean, that's why people invest. It's with certain kinds of traditional investments that pay dividends, it's a little different. You're looking there for long-term growth and short-term cash payments. But taking profits, if you are trading, and I think most penny stock players, most of them today do consider themselves traders. If you're trading, the whole point is to take profits, so do it.
I love that. And that's what always gets me. It's just why would you listen to somebody that says don't sell, don't? Or are you telling me that they're never going to sell? Because that is the point, like you said, a simple statement, yet it summarizes everything. However, it's amazing how easy these group thinks that can occur on message boards seem to blind people to the fact and somehow make them feel guilty. Like, well, if I sell, then I'm not being loyal and I'm not a true and it's just, it's all really nonsense. But I asked you this last time and I want to ask you again. What is one of those kind of phrases that you can see pop up time and time again, or maybe just a theme that you see pop up time and time again on message boards or wherever that just really drives you nuts, conveying some sort of fact that just, isn't, it's just not true, but you always see the slogan thrown around over and over again.
Well, one of them is, that's just your opinion. This is something that is becoming more and more popular in our society generally, and it applies to penny stocks as well. You can provide a tightly reasoned argument full of actual facts and citations of documents, and you wrap it up, and some idiot comes in and says, that's just your opinion. People need to learn the difference between opinion and fact. There are facts in Pennyland. And, if the company says in an SEC filing that it has X number of shares outstanding, that is probably the truth, because that's one thing they don't usually lie about. Every now and then they do, but that's something that usually is a fact. But there are people who honestly believe that some crazy interpretation they dream up is somehow as valid as a presentation made on the basis of fact and experience. I would advise these people to learn how to recognize people who do have experience. And I've always found that puzzling about the message boards, because I do recognize these people. There are lots of areas of, there are many things I don't know much about, but if somebody comes on a board I'm reading and speaks with authority, I recognize that. I can see this person knows what he's talking about. And yet it seems that many people don't. And I don't quite know why. But it causes problems for them in the long run. So, first of all, learn to distinguish good sources from bad sources in terms of published sources. Do not cite a penny stock tout as an article. It is not an article. It's a tout.
I gotta jump in there. Going back to the whole market maker thing, I asked this person, well, do you have any sort of like basically proof what Janice is saying? Do you have some sort of factual thing that you can show me? Sure enough, they link me to some Reddit, post where some guy used to be a market maker and he explains everything. And it's just like, I'm sorry, I'm not trying to be a jerk, but I mean, you could hop on a message board and start to proclaim all that stuff. How exactly is that some sort of proof? Some Reddit post about somebody being a market maker? It's just so I just experienced that recently, Janice. It's amazing,
and it happens all the time. I mean, I think with and we've seen it on the political scene with all the fake news stuff, and I don't know, are our schools simply letting us down? You can teach people to evaluate sources, but it's something many seem to be missing in their schoolwork.
And that it really does pertain perfectly to the penny stocks, because I've had it shoved in my face, and I've seen it time and time again. Not only your post, but other people that I do respect, because they lay it out there. They don't just say this thing's the greatest thing, it's going to $1 because there's an event coming soon. Okay, well, what does that even mean? But if you're saying, well, you might want to be careful because of this, that, and the other, and this, that, and the other all have links to whether it be filings or just bits of information that are coming from actual sources, then if that's somebody that's pumping or bashing or whatever you want to call it, I don't really care. I just care, are they actually providing some sort of substance in their post? And it's amazing. You'll see something very well documented, and then, like Janice says, well, that's just your opinion. No, that's not an opinion. That's kind of, the fact, that's the equivalent of saying the price was up 10% today because those are the facts of the, no, well, that's just your opinion. It wasn't up. No, I'm pretty sure that was up 10%. So it's amazing though. So I guess to summarize this as a point, and you can correct me if I'm wrong, going back to what would you tell new people, you got to, besides those other things, you got to learn how to distinguish what is actually factual, know how to check a source, and then what is actually just somebody's opinion. Is that a fair summary?
Yes, I think that's exactly what it is. And, you see people who come in and say, I'm a newbie, what about you, and ask you a question. And you give them an answer, and then they come back and but these people, this stock is heavily shorted. Because somehow or other, when newbies arrive, at least at iHub, somehow the first stuff they learn about penny stocks has to do with shorting. Just about always. And that is the last stuff they should ever be reading.
And that is so true. I'm new to the game. Can you, tell me something about this? You give them your opinion. You give them facts. You give them something. And yes, they always come back. This. Well, then, so in other words, you asked me for all this, and now because it doesn't fit your, viewpoint of the situation, I'm wrong, or I don't know what I'm talking about. Didn't you just say you were the one that was new? And it's things get sketchy in a hurry. So I guess, I don't know, as if you're new, realize that you're new. And yeah, I couldn't agree more in terms of the shorting stuff, because boy, does that lead people down a faulty view of how the markets and penny stocks actually work.
Yeah, well, you also have the people who don't say they're new. They go on making comment, and then all of a sudden they'll say something like, what does MM mean?
That's so true.
And you think, why do they even have money in this stock if they don't know what a market maker is? It's like anything else. There are certain things you need to learn first. And I would recommend to anybody, start by paper trading. That will give you some kind of feel for, set up. There are places where you can set up a portfolio. Go do that. It isn't like real trading. You will do better as a paper trader for a variety of reasons, but do it anyway. It will give you at least some kind of experience. Just jumping in cold is like a 13-year-old jumping into a Lamborghini and taking off down the highway at 160 miles an hour. it is not smart.
And I think that's a great way to kind of just summarize everything we've been talking about. A 13-year-old jumping into a Lamborghini and going 130 miles an hour because, and it happens all the time. And if, the story of CMKX doesn't kind of scare you into respecting the markets, because imagine if something that crazy can happen, then just imagine all the little things that are, that still do happen out there in the world of penny stocks, where it can be a very dangerous area if you're not prepared for it. So I asked Janice this last time, and she agreed, but I know I thoroughly enjoyed this, and she told us last time that she would come back at later times, and because there's plenty more horror stories that she can share, and she, said assuming Janice, that still your offer still remains,
yes, I
right?
find this fun, and maybe next time I won't cough my way through it.
No, we'll get those edited out, so everybody, they won't even know what you're talking about in that regard. But I had a great time again, Janice, and again, I thank you for your patience in coming back and doing this again. And like you said, at least we got your software all updated.
Yes, well, I am grateful to you for that. You made me do it.
And hey, it worked out for everybody. And if you're newer and you're listening to this, I just want to end with this. If you think this is all garbage, you think we're just making it up, go to Investors Hub, look at the CMKX board, start at post 1, and you have 300-some thousand posts awaiting you, and you'll see how it all unfolded. And I guess there's only so much we can tell you in terms of shorting. If you still think that it's economically smart to short penny stocks at certain price ranges, then I guess it is what it is. But we will definitely have Janet back.
To that. No,
yes, please do.
If they think shorting is such a great way to make money, I suggest they do it. Now, maybe they don't have an account at IB, but they can short an exchange-listed stock. That's easy. Anybody can short an exchange-listed stock. So I recommend that they do it because I think even if you just decide to take a brief technical short on Apple, for instance, you will learn something. You will learn, the first thing you'll learn is what these people don't seem to know, which is that when you initially sell the stock that you've borrowed, you don't get to play with the money. You don't get to play with the money from your short until you cover your position. So that makes it less attractive, to begin with. And you will, of course, be subject to certain fees, and it will be awkward. It will not be as remunerative as trading long can be. But as I say, I just suggest try it. See what it's like. I think that you will be a bit disillusioned.
I totally forgot about that point that you brought it up last time, but that's so true. If you think it's so easy, if you think that it all acts in a certain way, then like Janice, just go and do it. And you don't even have to do it on a penny stock. Go short Microsoft. Go short anything. And that is a great way to really get an insight. So thank you for bringing that up, because I remember now that you did bring that up last time, the whole Nike slogan. Just do it then. Go short something, and you're going to learn quite a bit. So do you have anything else, though, that you want to add? Because that was something that I'm glad you did, because I did forget about that point you made from the last interview. But anything else? I guess worst case, when we bring you back again at some point in the future, you can talk about it then. But anything else that you can think of?
Nothing I can think of specifically, except to stay away from the team stuff. I mean, I think I closed with this last time, but one of the things the message boards have taught me that I find surprising is that most people, if you were to go out in the street and interview people and ask them, do you feel you're independent-minded? Do you feel you're an independent thinker? They'll say yes. But in real life, most people want to be told what to do, and that is why they seek out gurus. And they will stick by those people. Well, and in the case of penny stocks, all these people is some alias. They don't know who he or she is. They don't know. Most of these gurus don't offer their own trading information. They don't show their plays, although lots of lesser players do. And yet they just decide this is the person I'm going to listen to. And I find that extraordinary. Because you will never know what you're doing unless you learn how things work, do your own DD, as they say. Learn how to do that. I realize some people don't have the time, don't have the inclination. Okay, then just play technicals. But don't follow somebody around, because chances are that person is urging you to buy while he is selling into your buy.
I hope people are listening. I hope people are listening. I will just leave it at that, because if you say you're independent and then all of a sudden you realize, assuming of course you're being honest with yourself, but your whole game plan as an independent thinker is, okay, now I got to find somebody to tell me when to buy and then when to sell. That's just, and maybe it's a legitimate excuse. I don't have enough time. That's fine. I get it. I don't have any problem with that. Then go find a good local financial provider, financial planner, whatever you want to call them, and have them take care of this stuff. Do not let some alias on a message board be your financial advisor and tell you when to buy and when to sell, especially in the world of penny stocks. When Janice said their little recommendations, oh yeah, just hit the offer right here. Hit that offer. 9 out of 10 times, yeah, that is their market maker representing them to sell their shares at the offer. It's just, that's not how the market works, and that is not a viable long-term solution. To just, even if it's a justified reason of I don't have enough time, that doesn't matter. The reasoning doesn't justify your actual plan of action. So yeah, I couldn't agree more. You're just maybe not as an independent thinker as what you may think that you are. So another good point. And looking at the time here, we'll wrap it up. But Janice, thank you very much for taking time out of your schedule to sit down and have a fascinating discussion.
Okay, I had a lot of fun, and I'd be happy
that
to
is
do it
great
again.
to hear. So thank you again to all you as listeners, and we appreciate your support. And if you have any questions, you can find us either on the YouTube channel, on our website, or just on iTunes and the other podcast players. So I appreciate, like I said, all of your support as listeners, and I really hope you take what you've heard from Janice and apply it to your trading, especially if you're in penny stocks. But if not, hopefully you just had a good story time with how crazy, the wild world of penny stocks can be.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.